Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 19th of January, 2021. Thanks for joining me on episode number 1919. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. If I can get a quick mic check, starting out at the office this morning. Let's dive right in and see what the markets are talking about today. This is the Convergent Trading pre-market summary sheet. This is basically distilling what the market position is as we come into the RTH session. Clearly risk on overnight posture and money flows coming into the equities. With Russell leading again at 21.45, back near highs again, followed by the NASDAQ. A couple things to note from today, of course, is this thing with the travel restrictions. The current president, President Trump, is removing travel restrictions, but at the same time, Biden is doing what he can to reimpose them. Very odd situation. There's also this U.S. stimulus. The market's still awaiting more details on the stimulus plan that would be put forth by incoming President-elect Biden. Remember, the inauguration is tomorrow. The change of government is already happening, and that's going to have an impact on the market. The market's already responding to that. And then, of course, earnings. We do have key earnings coming in. Bank of America, Goldman Sachs, before the market, and Netflix reports after the close. Bank of America already reported. Let's see. Bank of America profit falls as consumer banking business falters. Bank of America posted a drop in fourth quarter profit as historically low interest rates hurt its consumer banking business. Halliburton also reports profit cut 60% on cost cuts, profit up 60% on cost cuts, demand recovery, and so on and so forth. Pay attention to your earnings this starting last week. So that's where we are. We do have some numbers, some key scheduled events. The incoming Treasury Secretary, Janet Yellen, former Fed chair, confirmation hearing today at 10, foreign bond investment at 4, net long-term tick flows at 4, and then the China loan prime rate at 8:30 this evening. Currently, the S&P at 159,000, which is within what's normal, but still lighter than what we would expect. Inventories 99.8% long, 55.75 points of range. Remember that yesterday's session didn't really count towards RTH, so today's session is actually still part of Monday, or today's session technically started on Sunday night, and it goes all the way through to 4 p.m. Central, 5 p.m. Eastern. So 6 p.m. Sunday, this is according to the exchange, and this affects how margins are looked at and everything. From 6 p.m. Sunday, the current session has gone from 6 p.m. Sunday all the way to 5 p.m. today. That is considered one session. So 55.75 points of range. We have a low from the Sunday night session here in the U.S. at 37.40.50 and the high at 37.96 and a quarter. So the market's overall balanced. We do have a short liquidation, short covering profile, a P-shaped profile. We'll go over that in a second. So that's where we stand. I'm going to take a minute and review what we talked about on Friday, even though it's a distant memory at this point. But on Friday, the primary scenario is a push towards 81.82 right here, 81.82 key area. Expected a push towards 81.82, expected an impulse down. I expected a squeeze down to 47 as the next key area right here, 47. We did have two Vol Sigma underneath it at 41 and a quarter, but the main idea is a squeeze up to 81.50 or so, and a turn, an impulse down, and then continuation as we breach the low. Remember, as we were opening below the prior day's low, which means one-time framing up has been disrupted. One-time framing up going on here has been disrupted, so the expectation is a pullback, and the pullback target was 47. Here's what actually happened on Friday. We open up, squeeze to 37.80.50. Remember, we're expecting 81.82 as shown on that slide from Friday's video. And then here's the impulse. This when I draw these arrows, right here, that's an impulse. This is an indication that something has shifted within the market, and aggression is on one side or another. The impulse moves are generally followed by a continuation. Generally, this is that arrow. So you see it right here in action, 37.78 down below for a 19-point move, and then we expect a pullback, and I was looking for 47. So it closed a prior internal close right here, an internal gap close at 45 and a quarter, but it had already hit our target at 47 or so right in here. And then from there, expect it to float sideways for the rest of the session. Again, that was the plan. Fall into 47, little bounce, and float. And the expectation is it would close in that 65-ish range. And it ended up pushing all the way back through. And what it did on Friday is it played on the 3% historical probability. Again, past performance is not necessarily indicative of future results, but it played on the 3% probability, historical probability, that the initial bounce high and the initial bounce low would stay intact for the session. But a lot happened early on. I mean, we basically had 40 points in an IB, which is quite large, unusually large. But we ended up not breaching the high or the low of the session, which was a surprise. Once it migrated above, once it did finish that 47 test, it pulled right back to where? A beautiful test of mid with VWAP on top in the RTH, providing about a 5-point rotation. Then we get the second test, which I usually pass on. If it's going to go back and take a second test, it's likely not to hold. And then that's the rotation that got 14 points. And then once we breach up above the initial balance, we pull back to mid and VWAP right here. Just a beautiful kind of thing. As Tendex in the Head Trader channel at Convergent Trading pointed out, VWAP was the game, right? VWAP right here, VWAP right here, VWAP is the cyan. Right there, right there, right there. VWAP was where the market was testing and retesting, but some really nice setups there. And then we ended up selling on the close, but notice that the delta was not on it. As price sold off, delta was not participating at all. So we got this impulse rotation and breached the lower band here for rotations. We got an impulse rotation down, but we did not get delta going with it. So there was no aggression here on price. This is basically moving lower on bids being pulled rather than sellers hitting the bid. Okay? That's what we learned from Friday. The other thing is we had actually pretty decent volume on Friday. Let me pull that up. 1.4 million contracts in the RTH session before the holiday. That's pretty high. So there's a fair amount of activity in there. What has happened since? You'll notice that on my chart here, I have removed yesterday's 8:30 Central till 12 period. It amounts to about 36,000 contracts. I'm removing it because it shows up as RTH on my charts, but it's not really true. So what I'm doing is I'm treating everything from this point forward as one session. So you can see the low is at 37.40.50. The high is at 37.96 and a quarter. And essentially what the market has done is it has migrated higher. And so as a result of this, we need to draw a profile to get the actual overnight profile as a representation of both sessions starting, not here, starting at the next bar right there. There's the new session. So what do we have? We have a double distribution profile, right? Double distribution profile with a clear low volume node right on top of Friday's action. And this area here will be 37.68 or so. As long as we maintain above here, we are likely to walk ourselves back towards 38.09. 38.09 is the next balance area. So what has the market really done? It has tested all the way down to 47, went as far as 41, came back to where? The 37.95 MC point of control. 37.95 MC point of control. And that's where we are currently. We're trading at 37.87, the overnight point of control at 37.89. So what has the market done? It has tested below and has come back into balance. That's what it's done. The next balance area up is the 38.09. So if it takes out 3,800 today and starts to push higher, it is likely to squeeze shorts back up to the all-time high at 24.50 in the extended trading hours, and I believe 23 and a quarter in the RTH. So the map is very clear here in that we went down, we dropped, and then we rejected these lower prices and have consolidated. So what we have is a push, and it's flagging, and it's likely to get a continuation to the upside. And that would make up scenario one. So one of the things we want to do here today is, of course, look back at the daily. Remember, the gray, the change in color of these boxes is the month, and each one of these boxes is a week. So we're looking at weekly profiles on top of RTH, full day RTH bars. So each bar represents one full RTH session. And so what have we done? We've moved from the 36.94. We built a point of control or an acceptance area at 37.30. If you recall, that was the next target down, was 37.30 if it had continued going. And we established the week before last, we established 37.95 as a very, very prominent point of control or acceptance area. And what we did last week is we established ourselves on top of that, further confirming that 37.95. So the point of control last week kind of bounced around between 37.95 and 37.93. And here we are again, we're on top of that. So we have gone down, we've had a gap, and we have come up, and we are right on top of the MC point of control. So this is a clear indication. The auction is kind of screaming here. Nothing's guaranteed, but the auction's kind of screaming here that we have balanced. We got our break to the downside, which is what I would have expected. The market was coiling for several days, and the expectation is as it continues to coil, once it tips, it's likely to tip and push directionally in an imbalanced way or in a trend day away, and it looked like it was doing so to the short side based on Friday. And what we did in in today's session, starting Sunday night, we have come back and basically canceled that. So now you've got all this business that took place down here that is holding the bag. And as they come in, they are likely to start to walk themselves back to 38.09, 38.16, and 38.23 and a quarter. Does this make sense? The delta is still not playing along. As we sit up here and price moves higher with a point of control that is P-shaped, the delta is just not there. Okay, so the market is in a holding pattern and is accepting this 3,800, 37.95 area as value. Okay, so that's where we are. I could show you Bookmap because I'm in the office today and this computer is a monster and it can display it. But to be honest with you, what's there to see? Look at this thing. So there's something special about this Bookmap configuration. I actually have decided to filter size below 150 based on a statistical study. I just don't want to see what's there. So it's a kind of a black hole. There's not much to pick up here in terms of order flow until we get up into the 3,800. So the order flow is really not showing very much. So I'm going to move on. I'm going to bring you to what's expected for today because I'm getting a little wordy and long here. So let's start stock zones, master levels, and get you to this screen. What are we looking for today? Today, inventory, almost 100% long. We have, again, two distributions here. We have a low volume zone right up here, 70, 79, down into 67. This is a low volume zone. This is thin air. This is an air pocket. Okay, let's just put that on here. Air. Okay, this is an air pocket in yesterday's action, but it's value in Friday's action. What we're looking for with 100% inventory long, we're looking for the market to open in an open auction right on top of the overnight point of control, right on top of, excuse me one second. Winter dry air in Chicago just is not good for my throat or my sinuses. I think I'm made for the tropics. So we're on top of the MC point of control at 37.95. The expectation is it'll balance and start to move towards that 79, 77 area. I'm looking for it to find some support. I'm looking for that impulse back into the 3,800. I'm looking for a battle at 3,800 and then a push towards 38.09. 38.09 before it settles out. Not expecting new all-time highs the first day back this week, but that's what I'm aiming for today, or I'm expecting for today. So impulse up, balance at the MC point of control, impulse up again, and then squeeze. Okay. The secondary scenario is a failure to do this. So open auction that attempts to push higher moves into this 96, 97, 98 area, and then we get an impulse back to the overnight point of control, and we start to give it up at the 77, and we walk ourselves to 67, and we're back inside of the prior day's range, and we hold here. We're in a holding pattern. Just remember, the 81 is expected to provide support here yet again. And so we get back into balance and we hold steady, waiting out what will happen in tomorrow's inauguration. Remember, there are 25,000 National Guardsmen, Army men, and Army personnel in the Capitol for this inauguration. There's a little bit of risk there. Not sure if the market cares about it. We'll see. But it'll be paying particular attention to Biden's speech tomorrow and what he wants to do. And of course, as many of you know, the first 100 days in office set the tone set the tone for the presidency and policy and what can be accomplished in the next 4 years. I think the market's going to be very, very, very attentive because a lot of that, is going to be dictating what kind of fiscal and monetary policy there will be. Okay, that's the old Fed crack. Good luck. I'll catch you tomorrow morning, and mind your risk, right? Take care.